All right, that is, of course, so what's coming out of that address by the Finance Minister today, outlining some of the issues that, of course, will be the priority for this government as far as the spend is concerned. Finance Minister Enoch Godongwana is saying that South Africa should be spending more and working towards saving lives and livelihoods between now and February 2022. To unpack the outcomes of the midterm budget policy statement, I'm joined now by SAFTU's Zwelinzima Vavi, who will come on in a moment, CEO of BUSA, Cas Coovadia, the president of from Nehawu, Mike Shingage. We've also got partner at Ernst and Young, Professor Osman Mollagee, and economist Dawie Roodt, and we're also joined by our own Kopana Gumbi to unpack some of the key issues being outlined by the minister today. 072-110-5584. We can get your views as well. Otherwise, you can tweet us at Newzroom 405. Good evening to you all, and thank you very much for joining us tonight here on In Focus. Kopana, let me start with you, if you can quickly give us what would have been your highlights listening to the minister deliver the statement today.
Well, Thabo, I think the minister made great efforts in trying to assure the investor community, especially, that they were going to maintain what we would call their austerity measures when it comes to the budget policy statement that he addressed this afternoon. There's very clear direction that government will not be spending any additional money outside of what has already been budgeted for. Now, that includes all of the additional special dispensations that were made for South Africans as a result of the COVID-19 pandemic. There's around 37 billion rand that was allocated in the special budget in July, as well as all of the money that is already due to the state-owned entities in the form of debt repayments and servicing some of their debts. But other than that, the minister made great pains, or went to great pains, to just explain how the government are keeping on the track of fiscal consolidation in the hopes to finally reach what they say would be at least the financial trajectory that is positive by the 2020-14 year or financial year. So they're hoping to see a surplus around that time. As always, it's very tricky to see what they plan versus what they execute. We were aware that government had tried to implement a zero-based budgeting system, and that is still being tabled and discussed across government departments. In addition, they have tried to restrict the amount, the increase in the public service wage bill. But when we look at this medium-term budget policy statement, we see, in fact, that government had allocated an extra 20.5 billion rand to the wage agreement that was finally signed earlier this year, Thabo.
Mike, 60% of total non-interest spending annually goes towards social services, things like free basic services, employment programs, health, education, and social grants, among other things. The minister is saying, well, if you're saying this budget is not pro-poor, argue with that. What's your argument?
Well, while we welcome the social expenditure that the 60% it goes to, but we still feel that the budget is not pro-poor. I mean, what will be pro-poor is when you have a budget that will point to the direction of growing the economy, not suffocating the economy by employing more austerity measures. I mean, the evidence that we have today is that the budget that we did in February, that was more austerity measures than ever before, has the result that says today we have an unemployment of 44% and the economy that is shrinking or is at the recession for more than 100 years. And I'm sure South Africans have voted by their feet, showing that they don't accept this kind of austerity measures budget. So our view is that we didn't see much on the side of the poor, except that to keep the poor of South Africa reliant on the social grants, something which is supposed to be a temporary measure, but the government that is carrying, supposed to hold the private sector accountable for the monies that they are getting, for the tax cuts that they are getting, for the incentives that they are getting, in terms of how many jobs that they are creating every year, in terms of them making sure that they submit reports on a quarterly basis, in terms of the youth employment that they are doing, because of the reprieve that they are getting from government. So that, in our view, will have indicated the point of a pro-poor budget. This one, yes, it's keeping people in the social network, but it's not pro-poor because it's supposed to keep the poor, who continues to be poor. It's not uplifting us at all.
Cas, government failing to hold business accountable for the incentives that business is getting, tax cuts and so on and so forth, holding that against the type of employment that the private sector is creating. A fair assessment?
Not too sure it's government's role to hold business accountable. Business is held accountable by legislation and regulation. And if business flouts legislation and regulation, the law must take its course. I think that, business has been saying for a number of years that the best role business can play is to actually invest, is to establish new businesses and grow existing businesses, and through that to create jobs. And I agree, that's what we need to do, that we need to create jobs instead of keeping the poor in a sort of situation where they're consistently dependent on grants. We need a more sustainable way of addressing poverty. We need a more sustainable way of addressing inequality. And business has been saying for a while that investment and growth are critical to this. And it's government's role to create the environment for investment so that businesses, both local and global, can invest. And off the back of that investment, we can structure a sustainable and inclusive growth path for our country. And I think that the minister sent that sort of message through the budget.
The continuity, more than a deviation from the norm, is that something that is welcomed certainly by business, Cas?
Yes, absolutely. I think we don't have the space to be adventurous at the moment. I think prudency is the name of the game at the moment. We need to keep the ship floating. We need to manage our monies properly. We need to manage our expenditure properly. The increase in revenue, the minister indicated, is not a permanent increase. It's because of the commodity boom, and already the commodity prices are softening. And he made it clear that we can't plan for long-term permanent expenditure on the basis of a aberration, if you like, in an increase in revenue because of a boom. That's not going to last. So I think that continuity was there, and it's important because we don't have too many choices right now.
And Dawie, of course, government continuing to want to spend on employment, 72 billion rands towards public employment programs over the medium term. Will this, touch sides? Will it create the kind of production that we want to see as far as job creation is concerned?
No, absolutely no. The only way that we can sustainably create jobs in South Africa is to grow the South African economy. Now, I listened to my colleagues making their comments. I must say I agree with much of what's been said. I like Kupana's comments about the minister and the speech of the minister this afternoon. There's one comment she made that I have to disagree with, and that is referring to the current budget that we have, and Mr. Mike also referred to that as an austere budget. That certainly is not the case. If you're running a fiscal deficit of 7% of GDP, this is highly expansionary. But what I'm very, very concerned about, really, and in fact, I actually agree with the minister, but it just illustrates the absolute horrible state in which the South African economy is. The minister expects the economy to grow by 5% this year. Next year and the years thereafter, he's expecting, and I think quite realistically, economic growth than less than 2%. The next year and the year thereafter and the year thereafter. Now, how on earth can we keep on supporting a government that tells us that this economy is just not going to grow? Because that is the only way that we can sustainably create jobs in South Africa. It simply doesn't make sense to try to get people to spend money on people that wave flags next to the road. We know you need to grow the economy in order to create sustainable jobs. Now, let me give one or two numbers about how many people are directly dependent on the state for a monthly income. We've got 9.5 million people with a special grant that will lapse in March next year. We have already more than 18 million people receiving the normal grants as it is. We've got more than 2 million people working for the state and a couple of others. We have more than 30 million people getting an income from the state every month. And we have 12 million people working in the private sector. Now, these numbers simply do not make sense anymore. This is totally and completely unsustainable. And if you talk about economic growth well below 2% over the next couple of years, we are in very deep trouble. So yes, the minister, I think, is the best that the ANC can offer at the moment. I think he's a conservative minister. It is pretty much business as usual. He's following in the footsteps of Tito Mboweni. He did not rock the boat, certainly not the case. But if we talk about less than 2% growth over the next couple of years, there's something is seriously wrong. And clearly, we've got a government that is run out of options if you talk about less than 2% growth over the next couple of years.
We'll come back in a moment and get what needs to happen to get growth at least at above 5% to create the kind of jobs that we need to see. Tonight, the conversation with Mike Shingange, Dawie Roodt, Cas Coovadia. We also have Zwelinzima Vavi joining on, as well as Professor Osman Mollagee in a moment. Stay with us. Yeah. Thabo Vavi.
Yeah.
Ufuna ungenza njengo general. Welcome back, and the conversation tonight around the midterm budget statement tabled in Parliament by incoming Finance Minister Enoch Godongwana. Zwelinzima Vavi comes on now, joins us, and of course we have Cas Coovadia, Mike Shingange, as well as Professor Osman in a moment, and Dawie Roodt and our own Kopano Gumbi with us tonight. Thabo Vavi, good evening, and thank you very much for your time. I mean, we have been trying for the past, would say 12 to 13 years to see some inch of growth in our economy. We're almost sounding like a stuck record right now. People can't continue to be on welfare. Jobs need to be created. Our economy needs to be growing at this particular pace. But we are seemingly not making headway. And it doesn't seem that this budget itself has come up with any new ideas. It's seemingly saying we need to do what we've always said we were going to do.
Well, Kibos, there will be no economic growth which is driven by an austerity program. You can't be cutting expenditure left, right, and center and then hope that for some reason, miraculously, you will still have greater numbers of growth that matters. Remember, we're not just chasing growth here. There has been growth before under the former President Thabo Mdluli of up to 5%. This year, the minister is promising us that we will see 5.1% growth level, and that in the following years, it will come down to 1.7. It is growth that is important, of course. Dawie is right, but not just any growth. It is growth that will ensure redistribution of wealth from the rich to the poor. And secondly, it is growth that will ensure that there is sufficient generation of employment, in particular for the newcomers into the labor market, economic growth and employment generation growth that will ensure that it can cover and cater for the growth of our population. So far, for the past 27 years, our growth level have not been able to deal with the crisis of unemployment. So even though we would have seen levels of growth at some point, regrettably, unemployment has been worsening, now sitting at 44% of the population and 49% for black women and 74% for our youth.
Yeah.
So today's budget, unfortunately, as Dawie is correctly pointing out, is a story of the continuing slaughter of the poor. And that's why the rich and the conservative economists are so happy that the minister is staying the course of pleasing the rich at the expense of the poor. This whole notion, by the way, Tipos, that look, you must be celebrating that 60% of the non-interest expenditure is going to the social grants, have to be looked at it in its proper context. In 2019, perhaps we reached our peak in terms of our social expenditure, in that we were spending 17.1% of the GDP to health, education, and social grants. But now, in post the 2019, we will be spending 16.9 to those areas of expenditure: social grants, education, and healthcare. And if you look at this budget, it is predicting that in 22-23, we will be spending 16.7%. It's a continuous decline, despite the rhetoric that says we are catering for the poor, but it's actually a slaughter of the poor through this budget. And we, in the process, we're going to have to speak about how each and every of those aspects is being cut big time. Big time.
Dawie, I see you shaking your head. You don't agree?
No, of course, Zwelinzima, we've shared many platforms, but he's quite selective with his statistics here. And we talk about social expenditure. Technically, he's right to include education and social expenditure, but much of that reduction was on education. In fact, we've seen a huge increase in other forms of social expenditure, like the grants, for example. So, Zwelinzima, I like you a lot, but be honest, be realistic when we talk about
facts now. I'm giving you facts, Dawie. Where has there been an increase on social expenditure in this budget? I'm giving you...
Not on this one, of course not. Not in this one, of course, but over time, the last couple of years, there was a huge increase in social expenditure. There was a reduction in education expenditure, yes. But education is by far still the largest expense item. And education is a huge waste of money. You can simply compare South Africa to the rest of the world. We're not only bad, we're sometimes the worst in the world. And it's not only about mismanagement of the state, it is simply just bad management in many instances.
All right, Dawie, let's get Vavi to respond to that.
Okay. No. He's speaking theory. I'm giving you figures that are deduced from the budget of today that shows that the social expenditure insofar as the education, healthcare, and the social grants is going to be declining from 17.1% of the GDP to 16.7% by 2023.
So Thabo Mdluli, looking at those figures, where is the decline if we are spending more, for example, on free education? So some money has been injected into free education.
No, that's a lie. That's a lie. Here is the fact. The healthcare will be cut by more than 13%. That's the first point. The basic education will be cut by 8.9%. And the social grants will be cut by 15%. That's what is coming out of the budget. It's a massive assault on the standards of living. It's basically saying to the country, you can have as many Julys as you wish, but we're going to please Dawie and New York tycoons at the expense of the working class and the poor. That's the story of this budget.
All right, quick one, Dawie. That's where the cuts are: education, basic education, health, as well as social grants.
Yeah, that is just untrue. Simple as that. It's untrue.
Mike Shigage, what is your take on the cuts and where the cuts are happening here? Certainly, more being spent on free. Yes, Dawie.
What's for one example? If you cut social expenditure by 15%, you will have riots tomorrow morning in the streets. It's untrue. It's not true.
And maybe that's what Mike Shigage is thinking about as he's quietly thinking there. He wants to take riots and bring them to the street. Mike, what do you make of the cuts?
No, probably Dawie was so impressed by the fact that this budget was a continuation of Tito Mboweni without really looking at the facts. So as Comrade Vavi is saying, look, what point I wanted to make was is that everywhere else in the world, the economy will never grow. That when it's facing the onslaught like we're facing now, the response of both the private and the government is to austerize the economy, is to suffocate the growth of the economy. If you reduce the spending capacity of the working people or the earning capacity, there's no way the economy is going to grow. If people can't buy and afford the basic necessity that they need in order for them to survive, there's no way the economy can grow. If you increase the number of people who are unemployed, there's no way you're going to say you are trying to grow the economy. So that's a basic logic. So everywhere in the world where the economy was facing strife, the response of government and business was not for investment strike as we're seeing in this country. Because there's trillions and trillions of rands that have been hoarded by business that are not invested in the economy. The interesting point that Dawie and the others made here was that the government must provide a conducive environment, but themselves, the government cannot hold them accountable. Every day we hear business wanting to hold government accountable for their policies, but nowhere they do expect that when we spend money on business during this coronavirus time, it is big corporates that received stimulus relief from government without them being asked not to retrench workers as then when they receive public monies. It is big business that have got a corporate tax relief without them being told not to retrench workers. We see workers being retrenched.
I'll get Cas to respond to that in a moment. But
we are saying that the last point I want to make is that we welcome the fact that government is going to increase on the public employment. Little as that may be, but the fact that the government is pointing to that direction is better. But what is the private? What is the private doing in terms of employment?
All right.
What is their role?
We'll get Cas to go. He'll respond in a moment. But Kopano, quickly, from your side, what government points out to ignite growth? I mean, part of what they are talking about is part privatization or corporatization of Transnet, something that certainly will be for Labour to talk about.
Well, Thabo, I think the important thing to put into context when it comes to government spending versus programs to expand economic growth, at least, is that government have been very clear, and they go to great pains in this budget to outline that, in fact, what they have is 1.1 trillion in debt in the next few years. And they have been very clear that as a result of this debt, they have less and less to spend on social programs and social expenditure. The government have been very clear to say 21 cents out of every rand in expenditure goes towards servicing the debt. And that automatically has an impact on how they spend and allocate money for social programs like healthcare, like education. And so you do see that in the next 3 years, in the medium term, that they have reduced some of that spend that they would ordinarily give to these core functions. But it is a result of the debt that has been ballooning in the last decade. And now they're trying all sorts of different methods, as you mentioned with Transnet, for example. They're now trying to find ways within the current constraints to expand the economy and to grow it in ways that are what one would call low-hanging fruit. And so they've taken Transnet outside of the ambit a bit of government oversight and try to say, okay, how do we expand the freight trail in order to have more trains, more third-party users coming onto the line and getting goods to the port faster? In that way, they can collect higher customs taxes, they can collect more tax on the goods that people are importing and exporting, and that way trying to increase the money that comes into the fiscus through SARS, Thabo.
Kopano Kumbi, appreciate you. And let's take a break. We'll come back, get Cas to respond to some of these issues around business and private sector not coming on board with how many jobs they are going to create in the medium term. And of course, we'll get reaction from Labour as well on the Transnet being corporatized in a moment. In Focus continues.
State-owned companies are intended to be important as enablers of economic development. Many SOEs, however, have been badly managed and have failed to deliver. In many instances, they've also been devastated by state capture, making them increasingly reliant on government. Since 2013, for instance, government has directed more than 290 billion rand to bail out state-owned companies at the expense of important social expenditure. Going forward, the restructuring of state-owned companies, informed by an assessment of their strategic relevance, is a priority. In this medium-term budget policy statement, no additional funding is provided for state-owned companies. The exception to this is where guarantees have been called by creditors and conditions have been met by the OEC in question within the context of their strategic importance.
Right, back with you tonight. Restructuring of SOEs and offloading some of the SOEs which are not strategic. We'll talk to that in a moment. First, though, I want Cas Coovadia to respond to what Mark Shingange is raising. Cas, on the question of, for example, the guarantee loan scheme, private business being big beneficiaries of that, but no commitment as to how many jobs you're going to create, for example.
So, I mean, the loan guarantee scheme at the time of COVID wasn't to benefit the private sector. It was to enable banks under certain circumstances to actually be be more, what's the word, to enable the banks to help their clients manage their credit over that period. It wasn't to bail banks out or anything of that sort. So let's just be clear about that. And that was a fund established by the Reserve Bank and Treasury and some guarantees in place by them. But it was to enable banks to actually help their clients manage their way through their debt and the credit at the time of the pandemic. Then as far as creation of jobs goes, it's not in the interests of businesses to keep money in the bank instead of actually investing the money in business growth and creating jobs. Because they earn far more, shareholders earn far more, businesses grow, dividends grow, if they are actually involved in business activity. So it's not an investment strike if businesses are keeping their money in banks and not investing in the economy. They're not investing in the economy because we are not creating confidence we are not giving business the confidence that they can safely and sustainably invest in this economy. And those levers lie with government. They don't lie with business. We've been saying so take energy, for instance. As soon as we started with the renewable energy program and it was structured properly and it was managed properly, the South African financial sector invested billions in it because the environment was created for investment and for investment in a way that it's profitable and the investments are actually safe. So businesses don't want to keep their money in the banks, but all our discussions with government are on the basis that an environment needs to be created for investment. And the minister today said that the government's job is to intervene in the economy to create growth, not inhibit growth. And that's what business is asking.
Do you agree, though, with the view that says government is at the mercy of business? For example, when you talk about the loan guarantee scheme, yes, it was meant to assist all businesses, but would you agree that by and large, when we got down to the numbers, the people who actually accessed the loan guarantee schemes were big business?
Well, I don't have those figures in front of me, but we had this discussion on an ongoing basis at NEDLAC. And both, not only banks, but Treasury and the Reserve Bank also gave input there. And there were certain conditions set for access to lending through that guarantee scheme. And businesses that met those conditions were able to access the guarantee scheme and were able to access credit from the banks on that basis. And I mean, that was a loan guarantee scheme put together for very specific purposes. The Reserve Bank made it very clear that they don't expect banks to actually go outside of the normal banking practices in offering those loans, but that in the event of the loan going bad, the bank will stand guarantee behind them. The Reserve Bank will stand guarantee behind them. So we went through this process at NEDLAC, and those explanations were given.
Restructuring of SOEs, Thabo Vavi, and just weigh in on why you are not supportive of the 75 billion to be spent to create public jobs.
Well, let me just this is very important for us as a trade union movement. Before I deal with your question, just again on the further explanation on the austerity program that is going to hit the poor very, very hard going forward. And we now want to focus just for a minute, Tibos, on what this budget means to the public sector workers. It means that the total compensation of employees is planned to be reduced in this budget from 34.2% in the financial year of 2019 to 2020 to down 30.6%, from 34.2 to 30.6% by 2024-2025. This is not just a wage freeze. but this is also about cutting the number of employees in the public sector. Our calculation is that based on those figures, we anticipate that there will be 60,000 less public servants in the system by 2025. Amongst the nationally employed that will be hit the hardest, there will be 18,400 less police officers in the streets in the next 3 years, and that there will be a further 38,000 less jobs in the provinces. And we're already dealing with 40,000 vacancies in the public health care. Just imagine what those figures are going to mean in our public hospitals, in our public police stations, and in our public offices where we should be receiving even better services than we can. So
you're saying the extra amount of money being announced by the minister to bolster police and to fight corruption, to ensure that we are safe, that's just smokescreen.
They mean VIP protection. That's what they mean. The police stations already have a vacancy rate of 60,000 as we speak, if you were to listen to the National Commissioner of Police. 60,000. If you cut an extra 18,400 in the next 3 years, you can imagine what that will mean. We're already facing a situation where we're picking up 58 bodies a day on average. And our criminal justice system is so dysfunctional that it only guarantees you a 15% conviction rate for anybody committing crime, 11% for the victims of rape. That's what we call a march towards a dysfunctional, failed state, whose main victims are not going to be those speaking nice English and telling government you are doing very well and we are complying with the IMF and the rating agencies. The main victims of these cuts is going to be the black people in particular and the working class in general. And that's what is happening. That's the story. Now, coming back to your question, the reason why government wants to commercialize the ports is because it is preparing to hand them over to the private sector on a silver platter. This is exactly how they started to collapse Eskom, Dinel, Prasa, Transnet, and all those well-functioning state institutions during apartheid, which are now all on their knees. And the minister speaks as if he's coming from some planet, instead of saying that my government, my ANC, have deployed its worst in all of these state institutions to collapse them, and now we're going to defund them further. That's the first point, in order to collapse them totally before we hand them over to the private sector. Secondly, and most importantly, this whole notion of a focus on the ports talk to the strategy of the government that have not been changed. South Africa was always a post of a colonial master, where it was only being used as a point of extraction of raw minerals to be exported to the former colonizers' headquarters, where they will create jobs through beneficiation and building of secondary industries in Europe and now in China.
All right.
This strategy of fixing the ports is about deepening that economic growth path that is based on export, which is not going to be a local economy to build.
Let's hear Dawie's take on this. Transnet being corporatized, going outside the realms of government, bringing in private sector as part of a growth strategy. What's your take?
Yeah. I just want to add on what Cas had to say. Cas, just correct me if I'm wrong here, but I think the total support package was 200 billion guaranteed by the state to the banks. There wasn't a significant take-up on that, and I think the reason for that is simply because the rules were too tight. They should have made it a little bit looser and not use the bank's normal criteria, and then more businesses would have taken that up. I think that's the problem there. On your comments, Mr. Vavi, you know, in a weird kind of way, I agree with you on many things that you've said. Now, let me make a prediction here. And that is that there are, like I've said, there are more than 30 million people receiving an income from the state every month. That 30 million people, their income will fall over the next couple of years. It is already falling. And you're right, you're correct in saying that. Because we've seen a reduction in real terms of the wage bill. And that will continue to happen. And the reason why that will continue to happen is because we ran out of money. That is really as simple as that. We cannot increase taxes anymore because we're chasing away the productive people out of the country. And people are already not investing. You listen to what Cas had to say about investing, there's simply not confidence in the country. So that's my prediction. I'm telling you, this will keep on happening. Is that people depending on the state for an income, that 30 plus million people, their income will fall. The second thing that is happening, now we know that the Minister of Finance indicated that we're going to restructure Eskom, we're going to break it into smaller pieces. We know what's happened to South African Airways, we know what's happening at the harbours. There's some announcements today making about Transnet and all that. So the private sector is getting involved in these sort of things. Don't for one single moment think that is what the ANC want. That is not part of their ideology. Their ideology is they want to keep control over everything. But they've destroyed everything to such an extent that there's absolutely no option left now but to get the private sector involved. In fact, we have already, and there are many examples in South Africa. South African Airways is kind of privatized. Nobody really knows what's going on there. But we've privatized the police for all practical purposes. There are 3 times as many private sector security people in South Africa as policemen because the police is simply untrustworthy. But people just don't trust the police. They're inefficient, they're corrupt and all of that. It is happening in education. It is happening everywhere and it will continue to happen. So what is happening under your noses, Mr. Vavi, and I can say this the same to you, Mike, what is happening under your noses, these institutions are being privatized because we ran out of rope, we ran out of money, we ran out of options, and we can only get the private sector to help again. That is what's happening, and that will continue to happen.
Mark Shiganga, get your response when we come back from the break to that and more, of course, as we unpack what came out of that midterm budget statement tabled in Parliament today. Stay with us. Zwelinzima Vavi, Cas Coovadia, Mike Shiganga, as well as Dawie Roodt. We'll take some of your views as well. 072-110-5584. You tweet us tonight at Newzroom 405. In Focus continues in a moment. All right, we're back tonight here on In Focus, Newzroom Afrika, channel 405. Here's what the minister had to say about social grants earlier on today.
The additional revenue due to the commodity price rally created space for government to provide additional support for poverty and employment programs this year, without negatively impacting the fiscal position. Following on from the fiscal response last year, government has provided an additional 48.9 billion rand in fiscal support due to the unrest that took place in July and the impact of the COVID-19 lockdown. This includes the 37.9 billion in direct fiscal support. We are now making an additional 11 billion available to the South African Special Risk Insurance Association, which is called SASRIA, to enable them to continue settling legitimate claims from businesses' damages during the unrest.
Right, telling us there, the Minister, where the additional money made from the windfall they got from the mines, and certainly where that money is being focused. Mike Shingange, we have no option. We've run out of rope. We've run out of road. We've got to go to the private sector and get them involved. So, yeah, privatization is happening right under your noses, or maybe you are aware of it.
No, Thabo, two things I wanted to respond to Cas. One is this thing of the government providing a conducive environment. On one hand, they stand here today together with Dawie that they are very happy that the minister did not depart from what the predecessor ministers have been doing. And we are saying that which we have been following as government and all those ministers have brought us to where we are. Every policy position that they have adopted has not changed the trajectory of the economic meltdown, including unemployment as we are today. They are very happy about that point. But still they say the environment is not conducive for them to can be able to invest in the economy because apparently something more needs to be done. The second thing I want to raise with Cas is that the loan guarantee scheme that was given by government, which is public money, by the way, a person who lost his business because while he was running a car wash or a small bakery or a small tech shop there, did not access that money because of the kind of stringent regulations that are required by banks in order for people to access that money. But the big businesses, it was easy for them to access that money, but still they did not stop them from retrenching workers. That's the point we're making about the people who are always benefiting from the intervention that government makes when every time the economy goes down. So that's the first thing I want to say. But in terms of privatization, all we are saying is that the reason we're running out of money and the reason we're having so much debt in this country, it is not because the problem is not the debt. The problem is that we're not growing the economy in the country. The more you ostracize our economy, you're bound to run out of money, and you're bound to be forced to go out and borrow money. And when you borrow money, you must pay back the debt. The problem is that we must unleash the money that we have in the country. People must invest, number one. Number two, we must enhance the spending capacity of those who work, and we must try by all means to make sure that we increase the number of people who work so that they can spend in the economy, so that the economy can grow. When you require from government to continue on the austerity measures, including, by the way, at a time when we must defeat the burden of disease, including the coronavirus, you are cutting the expenditure on public health. When you know that South Africans in South Africa, they don't work, they don't have money to access private hospitalizations. They rely on the public hospitals, but you're cutting the capacity of such institutions. When you know that the South Africans rely on the public schools, but you're cutting on the education, while you know that people can't afford the private schools. Therefore, you're not assisting in terms of creating enough skills, enough health, people that can work, and also enough jobs. That's the point that we're making, that at the end of the day, when you spend public money to make sure that business don't lose their business, you must hold business accountable in terms of themselves keeping workers at jobs and also creating more jobs. We are coming from the presidential job summit here. When private made commitments, they signed a framework that they're supposed to hold the retrenchment and so create more jobs. No accountability at all that is happening there. We have opposed, for instance, as labor, what you call the youth employment incentive schemes. Business continue to rake the incentives there, but they are not accountable today. We don't know how many youth have been employed by those kind of incentives. So that's what we are saying about. It cannot be enough that only government must play their part, but the people who are receiving incentives over and over again from government are not playing their part.
Dawie, yeah, see, shaking your head?
No, Mike, you're wrong. That 200 billion rand is not public money. It is simply the state saying to the banks, you can lend out as much as 200 billion rand and we will share potential losses. The banks did not get 200 billion rand. That is untrue.
What does guarantee mean? What is the guarantee?
That is not public money. They didn't even lend out. They lent out something like 20 billion.
How on earth government can have a money guarantee if it's not from the public money? How will government guarantee money?
So you're wrong. It's bank money. It is not public money. And the second point is, I'm not happy with this Minister of Finance. How on earth can I be happy with the Minister of Finance? Is he predicting less than 2% economic growth? As an economist, how on earth can I be happy with a horrible prediction of economic growth less than 2%? I am horrified. We must be aiming for 5%, 7%, 10% economic growth. Then I will be happy. Not less than 2%. Never. Don't tell me I'm happy with this minister's budget speech. I'm certainly not.
Thabo Mdluli, 1.1 trillion in debt and, predicting 2% growth. We are having 30 million people depending on the state and about 12 million who are working at this particular point in time. Those numbers just don't add up, do they?
Timbos, the first thing, no South African unemployed prefers to be on a social grant. Nobody wants to sit at home and get a 350 rands a whole month, or even 1,500 rands basic income grant that we are demanding. Nobody. The 1,500 we are demanding is just 200 above the upper bound poverty level of 1,300. This notion that our people are lazy, they don't want to work, they want to sit at home waiting for the nanny state to give them money for free, is a propaganda against the poor. Basically, it's basically saying to our people, you are lazy. Our preference, our first demand is that people must be put in decent employment opportunities. I felt that I must address that thing today. We are not enjoying, even to today we're marching in the streets of Cape Town, demanding 1,500, and we had to explain again that 1,500 is not a real solution. Social grants are not a real solution. The real solution is creation of employment that pays workers a decent wage, a living wage. Having said that, the second point that I feel that I must address is that South Africa is unfortunately having the most corrupt corporate sector in the whole world. If you look at the PwC report for 2 years now, they've been saying that we are sitting at position number 2 of having the most corrupt corporates in the entire world. Why are we saying so? Because already these people are stealing 400 billion rands and they are moving that money out of the economy in dark hours or in early hours of every morning, because they want to enjoy that in tax-free heavens all over the world. 400 billion rands that could be used here, but they're still shouting, we need an environment that is conducive. They are stealing 300 billion rands every financial year in the procurement budget. They are dodging their responsibility to the tax to the tune of 50 billion rands every year. And they have been given tax havens already in South Africa. During apartheid, they were paying, smiling, up to 52% of corporate taxes.
Let's wrap it up. We're out of time. A quick one.
Are now down to 27%, but they're still complaining that they want government to do more. Greedy, selfish, and corrupt.
That was Zwelinzima Vavi. I appreciate your time. Mike Shingange, Dawie Roodt. We lost Cas Coovadia today in a moment as well. We also had our own Kopano Gumbi. We recap what's making news tonight on In Focus when we continue next. Stay with us.